All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for November 18th, 2021. So I've got about 10 of the research weekend presentations sent to me. We're getting them uploaded into the research weekend course. I'm going to put in another dozen of the best of our past presentations, one that I think are still timely. Everything on the left in the yellow are courses on our new Rizuku learning management system. These are all the trading courses that we're offering. I will migrate the day trading and swing trading and hybrid courses over there once I get these other ones established. I'm going to keep them on Basecamp for right now. So by the end of March, we will have moved from Talent LMS over to Rizuku. So those courses will still be valid until on Talent LMS until the end of March. I've started the protreptic coaching course. That's when I'm looking to take Aristotle's approach to coaching the philosopher kings and apply it to personal development. The foundations course is already migrated. So the one that starts in January will be taught from Rizuku. That one's ready to go. The Creativity 101, the basics, that's already available. Got a half a dozen people going through it with very high remarks. Dr. Tharp went through that and was very favorably impressed with it. And he actually did all the exercises and the worksheets and found that to be very helpful. He was a little skeptical at first until he actually did the work. And then he said, oh, yeah, I guess this actually works. I'm going to be putting together the Creativity 202, which builds on that basics and then teaches the material that comes from Angus Fletcher and story science. But it's important to lay the basic groundwork here with the Creativity 101. That one's inexpensive and gives you foundations. The meditation, I've had a half a dozen people take that one already and favorable remarks, basically a non-denominational approach to learn how to meditate in a straightforward manner. And it'll help you achieve the zero state. And the money that both of those courses raise are going right to the soccer academy. So there's not much, those are pretty inexpensive. Betty Holtman is going to do a cryptocurrency presentation as part of the Tortoise Research Weekend. And I've looked at her, the stuff she's already done, and we're just going to make that a course because it is, it's like crypto investing 101. And she's done a really nice job with that. And I think it's a course everybody needs to have access to. So that's going to get added to the lineup. Strategy 101 is, the basics of how to do top-down planning and align your activities with your goals and your identity. And that goes not just for trading, but for anything. And then I'm doing, in conjunction with the Waters Center for Systems Thinking, I have become licensed in developing systems thinking courses using their basic material. And they are one of the leading think tanks in the world on the elements of systems thinking. I've got about 35 years now of practical work in that area. My master's is in systems management, and their stuff is top notch. And I've become licensed as a curriculum developer and a train the trainer for them. So I'll be offering 101 is the basics of systems thinking. 202 will be how systems thinking is applied directly to the trading enterprise, the same way that Creativity 101 and 202 are going to be like that. On the right-hand side, I have become licensed. When there's COVID, there's nothing else to do except just get better. So I have become licensed from this European foundation called positivepsychology.com that uses science-based approaches to the positive psychology movement. So these are all courses that are vetted by double-blind, peer-reviewed, world-class research and practical applications. And so I'm going to be tailoring these directly for the trading enterprise as well. And so there's some science-based material on motivation and goal achievement, resilience, which I think is really important, mindfulness in the moment. That's like a zero state. Maximizing strengths masterclass is a way to do self-awareness and self-development in order to tie your systems and your approaches into what your actual strengths are. So that one's pretty cool. And then emotional intelligence, I find, is an important way to develop empathy and care for yourself, but also for understanding others. And I believe that psychology is such an important part of trading and understanding the markets that I think there's a real practical reason to develop emotional intelligence. So I will be looking at tailoring that course to help us as traders. The foundational introduction to positive psychology, what that movement is all about, and the evidence in favor of it. And then there's a number of tools in the positive psychology toolkit that are like practical exercises and bite-sized learnings that are available for you. So as people have identify particular gaps that they want to work on, whether that's to fix a problem or to seize an opportunity, we'll be able to dip into that warehouse of tools that positive psychology offers. And I've become licensed on that stuff so that you don't have to, and I'll be turning these into courses that we deliver through Rizuku, and that's going to be part of the coaching program too, that when you get accepted into the coaching program, and these become things that will help round you out to become a self-sufficient trader for decades. So preview of coming attractions here. All right, let's go ahead and jump into the material. Hey, while we're here, I did want to follow up on yesterday's discussion. So yesterday, we talked about IWM was the index that had lost the most. And so we went to the swing chart and we identified this as a critical state yesterday. And we put that yellow box as a breakout box. And I said I was ready to follow that in either direction as soon as price left that box. And then we identified these two price levels as places where I'd be looking on it as a swing trade to add a second position. And then what we got today with a direction neutral approach was this is on 1 minute charts. And this is my management screen on the left. I was trading off my phone with no indicators other than price. And I built my standard minimum manageable risk box here. We had the market open here. It rolled up to the top of that box and then rolled over and made a new low here. And it had moved a minimum manageable risk box off the top, made a new low. And so just instantly treated that as a collapsing dragon and got short. On this little blip and a new low, I treated that as a Kata 2 continuation. I thought briefly about adding a third position, but it was already deep in the money. I said, and then took essentially a 1, 2, 3 exit. And then it moved a Kata 2 off the bottom, essentially a minimum manageable risk box. So we had the low and then a higher low. And then this became a Kata 2. And the size of this risk box is the same as the previous risk box. So there was some symmetry. After about 15 minutes, it made like a Kata 2 and another Kata 2. And then so I put a second position on just because. And after it made this little run up and started getting into a consolidation phase, I moved the second position to no lose plus dinner for two. And then this thing ended up exiting approximately here where we put that second position in. That turned out to be something like an important region. So that ended up being about, let's see, 1, 2, 3, 4, 5. That was about 6R on the collapsing dragon. And then this one gave us about another 4R combined on those two kata twos. So I just wanted to say that when you have a critical state and find the mover, and it was clear that the Russell was the one that was the most active and the most postured for a big move today, based on the way it had performed yesterday, that's what turbo trading looks like. And it doesn't have to be complicated. After a while, you learn to see those patterns. And notice how simple the line is. I find that much easier to read, less agitating than the use of red and green candles, which I find distracting. And so the line is we call this visual box trading. We did a lot of that during the hybrid trading workshops all last year, which is part of the hybrid course. So visual box trading, I think there's also a section of that in the hybrid trading course as well. Or I mean, in the foundations course as well, visual box trading. So that's what 10R looks like. All right, back to the regularly scheduled program. So today, the sideways is just continuing. It closed right near the top of the stack. So I'm going to be putting that same kind of risk box that you just saw with IWM. I'm going to put that on the close near the all-time high right there. And I will be ready to do the same thing tomorrow that I did today with IWM. And that is treat this whole thing as a critical state and ready to go short. Were it to break down below the that yellow box right there, basically below yesterday's low or yesterday's entry. Yesterday's opening, I should say. God. And then where I would look to add a second position intraday is if it broke below the belly of the dragon, which is also the daily low. And then that's postured to really pay off if the PSAR breaks. And then it gets below the 10-day low. That's where I would be adding a third position. And then if it gets to the Bollinger Band mean and breaks is where I'd be, not a large probability of that happening tomorrow, but that's what the downside structure looks like. And then to the upside, it's kind of even easier. I'm ready to go like this, getting long, really just above the high of the day. In fact, I'm going to tighten up that little. I'm going to go right to the RL10, which is also the daily high. And then I would look at probably just on a, if it gets above that line is where I would add the second position. Oops. Sorry. So that's at about 473. And so that's what tomorrow's, turbo trading plan looks like. That's essentially using a swing trade frame, but using either 30-minute, 1 hour, or 2 hour charts if you don't have time to be micromanaging. Like I showed you how to micromanage there on the 1 minute chart on the line chart. But you could use the 30-minute, 1 hour, or the 2 hour charts and treat this as a genuine swing trade. But I wanted to be ready to get large on IWM on the 1 minute. So the question from Richard was, do I enter on the downside if it takes out the open? Well, on this particular frame, where I'm drawing it is right below what was essentially today's open. Because all I need is a risk box of about 50 cents. What I'm really doing is bracketing the close with about maybe 50 cents on either direction. And it just so happens that lines up nicely with, this morning's open. So I only need about the whole yellow box is about $1. And what I will do is use a 50-cent position sizing and then just go with it. But if it breaks out below, that looks like 469.50, which is yesterday's low, which is also that little blue dot you notice is the whole 3-period moving average dot. That looks like an important price level. I want to be short there as it comes to test the dragon. So that's just a key price level that I've analyzed, and I'm going to get short at the price level. Does that answer your question? That's basically a hybrid frog with a minimum manageable risk box. That's in the foundations course and in the hybrid trading course and the day trading course too, for more details. In fact, the bar by bar course, which that has about 30 hours of trading. That most of that is intraday, and it always starts with that hybrid frog box right from the open. So that's a pretty good piece of training to take. All right, so that's the plan for the market. Otherwise, very little change from yesterday's briefing. I just noticed from the 10-day low, it has come all the way back up to the 10-day high. And we're getting ready to test that. So any breakout above that 10-day high looks to me like free and clear and off it goes. But then a breakdown, right, gives you the opportunity to get that full move heading down towards the Bollinger Band mean. So I want to be ready to go in either direction. That's what a critical state looks like. Okay, so let's take a look at the sectors real quick. All right, so the S&P was up a third at 0.34, had treasuries at 0.38. The Qs did well at 1%. You had diamonds off a fraction there at 0.14. You had the Russell off, excuse me, 0.42. And then emerging markets were the big loser of the day at minus 1.22. So mostly the story was tech today. The winning sectors today, you had VXX, so there's still some caution to the downside. Technology up 1%, oil 1%, and then Simon Property Group 1.13, and then XLY is the consumer discretionary, and that was so not much to choose from other than tech and real estate. The winning targets, Devon Energy, John Deere 1%, Tesla and Microsoft around 0.68 and 0.63. And that's about it. So pretty slim pickings. And that just reinforces the fact that the broad market might be incrementing north, but there's not a lot of individual components that are outperforming it. So this looks just like institutional money buying the index, but not differentiating with sectors that much. All right, underperforming sectors. So we have blended commodities 0.33. You have wood, oil exploration, and the FANGs basically flat. lithium batteries and consumer staples minus 0.3 and 0.36. Materials, agriculture, finance, the other lumber, biotech, energy. Mexico is off 1%. And you can see just how many things were getting slaughtered today. Wheat and precious, Brazil, Arc Innovation, Moonshots, blockchain, marijuana, all in between 1.8 and 2.6. Arc Genomics, 3.5. Clean energy, 3.8. Now the cluster of the cryptos. Bitcoin, the Bitcoin Trust down 4%. Blended large cap crypto 4.2, Ethereum 4.2, and then the underperform, and then Robinhood and Coinbase underperforming as individual targets, off 7% and 6.5%. So there's more room for those to be traded intraday. Virgin Galactic and PayPal 2.8. TX, the steel company, US Steel, the steel company, down 1%. Alcoa. So a third bad day in a row for the metals. So they may very well be shaping up for some good moves in either direction. So entering critical state territory there. Let's quick look at US Steel. So that negative move in US Steel, for instance, feels really important because it has really closed. It has closed this gap and is now failing further. And it just violated the Bollinger Band mean. So now the next leg down is to see if it's going to come all the way down to the Z1. And that's after a really nice move that took two legs to get all the way up. So you can see just how much. This is why we love them as traders, right? Because you get exaggerated size moves in both directions. So you can't fall in love with them on a fundamental basis. News just moves these things around too much. So you got to be prepared for that. But I like the fact that they have pulled back all the way to the Bollinger Band mean. Now that actually sets up a nice little maneuver like this, where we kind of get really strict, a nice tight risk box, and you're only talking about a 30-cent risk box in either direction. 25 cents you probably get away with, which is 1% of the price. So I'll be ready for that to break out in either direction as well. All right, let's take a look at Luke is messing with me here. He just uploaded a different chart. Come on, Kenneth. All right. Where is my little? Gotta find my market pen here. Just a minute. All right. So we're going to be happy by the end of the day. A gap up rollover when it breaks through the belly of the dragon. See how the dragon rolls over and the VWAP has rolled over too? That makes this a great short. We could have even added a second position here, but he gets it here when it breaks through this Z3 line. So that's a great second position, a reasonable third position. But after this, 1, 2, 3, and it comes all the way back, just scratch that right there. And now the reason I say that is that's half an R, but times 3 positions, that's 1.5 R that you're giving back. So if you make that a 0, you make this one 1.0 and this one 1.9. And so you're going to increase by 1.5 R. And then you can use that as your entry, and that improves this entry. Still, this is a nice stop and reverse, second position. And now he nails this here. That's nice. And that gives him 2.8. Reasonable effort to the short side, stop and reverse gets paid. We might have gotten paid a little bit better than that, but that's not bad for a scratch. And then kind of just grinding along. So that right there is 1.1 of just grinding. And that's what attention to detail over here will pay for that. You give a little more attention to detail here, and that makes that free trades. Still, plus 2.5. Good work. That was the only chart that was posted. So we will jump right to the daily. Stand by. Okay, let's go to dashboard number 1. Oops, excuse me. Overbought on every dimension now, and bullish normal, all good. The VIX is still warning us about potential downside weakness. Richard asked, would it be better to just pick a better stock or instrument instead of focusing on the chop? Yeah, we don't want to be in the chop anyway. That's sideways quiet channels are not a place to be trading. We want to wait for the abnormal moves. So breakouts from abnormal sideways quiet, like that's what a Z3P is, or right from the get-go, the hybrid frog gets you into those early first moves. Otherwise, you're waiting to see the movers and then making the counter trend move, which is an SSC. So that's hybrid trading in the foundations course. Take the course for more detail. All right, so we're deeper. We're below the 0 line and entering kind of into the winter phase of the risk Z. The Russell is still showing a propensity to upside positioning, like in the channeling. That's such a high probability swing trade that's going to be my high priority for tomorrow. I expect that to be a big mover tomorrow, just like it was today for 10R. So find the mover to find 10R. To answer the previous question. Home Depot, Microsoft, Pfizer, Procter, and McDonald's in the Dow. For the min pains, those are the ones that are closest to their 10-day high. Still seeing some weakness in Brazil, biotech, energy and metals and mining. We already know that the metals have a propensity to make large moves. So that should be on your short-term list for preparing positions for tomorrow. Tons of auto framers ready to rock. That's a very good sign for tomorrow to be a very powerful move. The same way that IWM moved today, I expect to see that kind of move in the broad indexes tomorrow. You got a lot of things that are in the channeling and overreaction signals in the Dow. So that means the whole market is poised to make these large moves, plus a bunch that hit the 5DDs. Plenty to frame. This is a target-rich environment. So find the movers. In the ETFs, again, lots of auto framers ready to go. All looking good. So much to choose from in the auto framer. Merck and Disney are 7 and 6 to 1 respectively. That's how you find the movers, guys. Right there. Brazil's ready to make a big move at 3.5 to 1. There's IWM and EEM right hovering right at 2 to 1. So they're well postured. On the daily squeezes, you got real estate and treasuries are looking good. So fall is good because that means you just saw a summer. It has had some measured pullback. It's not in the winter yet. And now you're ready for it to recover or ready for it to collapse into the winter, which means that it's postured as a critical state, much like the IWM was. That's my favorite setup pattern. Microsoft, Apple, Pfizer, Home Depot. Tesla's looking pretty good still. You know, Home Depot and Tesla constitute 30% of the symbol XLY. You can see XLY is in great shape. That 30% of that performance in XLY is coming from the combination of Tesla and Home Depot. But otherwise, the three strongest ones, the S&P, and then both the technology ETFs. That should tell you something useful. And then the stealth trade is this one here, real estate. It's just absorbing free cash. Every time the government prints money and gives it away to banks and capitalists, they're buying real estate with it. Otherwise, everything is per normal. Cautionary tale, the market rolling over. Must be careful. And that's what the grind looks like. So the last time it did that was here. And look what it did when it couldn't hold the edge of the river. It did this. So if it were to do that again, we would see this kind of move. Stand by. All the way to the bottom of the river and beyond, which means that you could see this thing go all the way back to like 435 if it were to be symmetrical. That also happened in here. It gets to the bottom of the river. So even if it just gets to the bottom of the river, that's a move back to about 448 or call it 450, which is 2.5%, which takes it down past the Bollinger Band main. So that's the move to the downside that we are calibrating. And you can see the RL30 is already rolling over. On the other hand, the RL10 has cooled off from a 3 sigma move at the peak, and it's all the way back right at the 0 line. So the 10-day has cooled off, but without a collapse. That's what the upside move looks like. That's like another like a $10 move in the S&P to the upside. That's the support that it would take to do that. Okay. All right. That's everything we got for today. We'll get this published and posted. Thanks for your kind attention. And we will be prepared and ready to trade tomorrow. Take good care and see you in the chat room.